The IRS created one account that lets your investments grow completely tax-free. Not tax-deferred, not tax-reduced, tax-free. This account is called a Roth IRA, and if you are watching this video, this is your complete Roth IRA for Beginner's Guide, explaining how a Roth IRA works, who qualifies, and what it can actually do to your retirement. You put in after-tax dollars, it grows for decades, and when you pull it out in retirement, the IRS gets nothing. Not $1 of the gains you spent your entire working life building. The people who understand the Roth IRA and use it correctly are quietly building wealth in a way most people do not even know is available to them. Start with a number that makes this account worth understanding. Put $200 a month into a Roth IRA starting at age 25. Earn something close to the long-term historical average return of the US stock market, around 10% a year. After 35 years, you could end up with somewhere around $750,000 by age 60. You put in roughly $84,000 over those 35 years. The account could grow to around $750,000. And under current Roth IRA rules, the IRS gets none of those gains. Not 15% capital gains tax, not 22% income tax, zero, as long as you follow the rules for qualified withdrawals. In a regular taxable brokerage account, those same gains could easily create a six-figure tax bill, depending on your bracket in retirement. In a Roth IRA, that bill does not exist. This is not a loophole. This is exactly how the account was designed, and most people are not using it. What is a Roth IRA exactly? IRA stands for Individual Retirement Account. It is not an investment. It is a type of account with special tax rules attached to it. You open one at a brokerage like Fidelity, Vanguard, or Schwab, and inside that account you choose what to invest in. Index funds, exchange-traded funds, stocks, bonds. The Roth part means you contribute money you have already paid income tax on. No tax deduction today, no upfront write-off. But because you already paid tax on the money going in, the IRS does not tax it again when it comes out in retirement if you follow the rules. Pay tax now, never pay again. That trade-off is what makes the Roth IRA so powerful for anyone who expects to be in the same or higher tax bracket later in life. You lock in today's tax rate on the contribution, and everything it grows into can come out completely tax-free. Who qualifies for a Roth IRA, and how much can you put in a Roth IRA? There is an annual contribution limit. The exact amount changes periodically as the IRS adjusts for inflation, so always verify the current Roth IRA contribution limit for this year before you contribute. For recent years, it has been in the mid-thousands of dollars annually, with a higher catch-up amount available once you hit 50. There are also Roth IRA income limits. If you earn too much, your ability to contribute directly phases out and eventually disappears. The exact ranges depend on your filing status, single, married filing jointly, and so on, and they change over time. If your income is getting into the six-figure range, check the current Roth IRA income limits for your filing status before assuming you qualify. If you earn above those limits, there is a strategy called a backdoor Roth IRA that some higher income people use to still get money in. It involves extra steps and potential tax complications, worth researching separately or discussing with a professional. And you need earned income to contribute. Investment returns, rental income, and gifts do not count. It has to come from wages, salary, or self-employment, and you cannot put in more than you actually earned that year. Made $4,000 this year. $4,000 is your ceiling, regardless of what the regular limit is. Can you take money out of a Roth IRA early? Most people assume the answer is no, and that assumption stops a lot of people from starting. The actual answer is you can withdraw your contributions, the money you actually put in, at any time, at any age, with no taxes and no penalties under current rules. Not the gains, just what you put in. That makes the Roth IRA different from a traditional IRA or a 401k, where pulling money out early usually means income tax plus a 10% penalty. With a Roth, your contributions are always considered to come out first, and since you already paid tax on them, there is no additional tax or penalty on that portion. This does not mean treat your Roth IRA like a savings account. Every dollar you pull out loses decades of tax-free compounding, and once you take it out, that contribution space for that year is gone. But knowing the contributions are accessible if something genuinely goes wrong makes it a lot easier mentally to start, because you're not locking your money in a vault you can never touch. What does maxing out a Roth IRA actually look like over time? If you contribute the maximum each year, whatever the current limit is for your age, starting in your mid-20s and continuing to around 60, at a 10% average annual return, seven-figure territory is realistic. You might contribute a few $100,000 total and end up with a portfolio well over $1 million, all growing inside the Roth IRA completely tax-free. Even at the modest end, $100 a month from 25 to 60 at 10%, you could end up with several $100,000 completely tax-free by retirement. The numbers will not be exact in real life. Markets are volatile. Some years are terrible. Some years are outstanding. You might earn more or less than 10%. But the gap between what you put in and what it grows to, when gains compound tax-free for decades, is the whole point. The Roth IRA does not care whether your monthly contributions look impressive. It cares how long you leave them in there working. How do you open a Roth IRA this week for beginners? 3 steps. Step 1. Pick a brokerage and open a Roth IRA account online. Fidelity, Vanguard, and Schwab all offer free Roth IRA accounts. No minimums, no ongoing fees, takes about 15 minutes. Step 2. Make your first contribution, even $50 or $100 to start. You generally have until tax day of the following year to contribute for the previous tax year, but do not wait for a deadline. The earlier the money goes in, the more time it has to compound. Step 3. Choose a low-cost S&P 500 index fund inside the account, set up automatic monthly contributions, and leave it alone. Every dollar growing inside it from this point forward is under tax-free protection, as long as you follow the rules. Before you go, the 10% return used in this video is based on the long-term historical average of the US stock market. Past performance does not guarantee future results. Markets can be volatile, and returns can be lower or higher. Roth IRA tax rules, contribution limits, and income limits are all set by Congress and can change. Your specific situation, income, tax bracket, existing retirement accounts, and goals will shape what actually makes sense for you. This is not financial or tax advice, it is education. Talk to a licensed financial professional for guidance specific to your situation. Drop a comment below. Do you already have a Roth IRA? Or is this the first time you are really seeing how a Roth IRA works? If this gave you one thing you are actually going to do, subscribe. Every Thursday and Saturday, a new video on how money actually works and how to make it work for you. See you next time.